I once took 6 figures in personal debt with a 30% equity kicker on my business to fund a business. Candidly, 100% at one point, the plan was to find a shell and do a reverse merger. I mean, actually Berkshire Hathaway-esque, right? That is literally what Warren Buffett did. $1 million is both a lot of money and a very little bit of money at the exact same time. I've seen people doing handstand courses, doing $70,000 a month on how to do a handstand. People are sort of underestimating distribution.
You're like the Dos Equis guy, because I was doing my research on you, and it was like, you started as an internet entrepreneur, essentially doing SEO as a teenager. Correct me where I'm wrong, okay? You founded this company called TMO Holdings, which was like a financial media consumer brands company that you eventually exited out of. My notes say an exit of 30 million. I don't know if that's accurate. Is that accurate?
It is. It just over. A lot of it was stock. So yes, at the time, but fluctuates as by the second.
All right. So you go from the SEO world as a teenager, you go to then this internet holding company where you're doing financial media and consumer brands. Then you buy this Blue Angels hearing aid company that's direct to consumer that you ended up exiting out of. And now you're focusing on leveraging your distribution channels and buying unsexy internet businesses, like the unsexy businesses in the most sexy industry.
Sure. That's pretty right. I keep I have like these little deal toy shelf in front of me. No one can see it except for me right now. But it's partially like as a reminder to me. Sometimes I'm like, feel very imposter syndrome. And I'm like, I did buy that. You know what I mean? Like we did, we did sell that, And especially while I sit in this little existential crisis about like where what I'm working on now progresses into the next decade of my life at 36, so that's not.
I have people who do that. They'll like read off my history and I'll be like, oh yeah, I forgot I did do that thing.
I did do that. Yeah.
But, so what's really cool about what you're doing is you're like the Warren Buffett of now. I know I get it. You're not 100 billionaire. From what I can tell, you're like finding these unsexy businesses within tech. And then you're just worried about cash flowing them, growing them, et cetera, and exiting. Am I reading the thesis right? Is that close?
You are. I mean, I think there's like a little bit of a lag on your thesis, and only because obviously I'm the only one inside my brain. Candidly, like I mean, 100% at one point, the plan was to find a shell and do a reverse merger. I mean, actually Berkshire Hathaway-esque, right? That is literally what Warren Buffett did. I think everyone always Berkshire Hathaway was a textiles company, right? And and just started shoving assets into it. And I know, because of playing the financial media space for a long time, I'm pretty familiar with reverse mergers and RTOs and whatever. I had thought maybe the plan was to go more that route. I think right now, what I realized was some of the stuff I've been buying was too small to really scale out. Mm-hmm. And so the question is, do we either go a lot bigger, which is some conversations I've been having with people, or what? But yeah, you're spot on. That is the thesis. What I can tell you though is that the small stuff is fun and it's cool. It sort of hits my ADHD. These little boring internet businesses that I think are kind of cool and fun to me because I get obsessed about growing things. But not having one that can scale out to be much bigger, I think, although they solve my ADHD, they don't like fill my cup in the same way, if that makes sense. I don't know.
Dude, yeah, it makes total sense. So do you have companies right now that you own and invest in, or have you exited out of everything?
Sure. So, I mean, a weird portfolio of stuff. Like we have like a soccer blog, that's like,
awesome.
I bought a couple years ago because I thought the writing was on the wall. All ships rise on high tide. I think soccer has come to the US in a crazy way. And I think like you could perform poorly in that industry. And as long as you sort of stuck around, you do well in terms of search traffic and stuff. Messi going to Miami was a huge deal, right? Like,
yeah, massive deal.
And then we have the World Cup coming to North America, which is going to be just a huge, huge, huge deal. And I don't run that now. I have a partner in that. He was a goalie, played soccer. His name is Bart Kriesman. He's the man. But so he runs that.
By the way, my dad was a professional soccer player.
Oh, really? Dude, I think MLS is going to become massive, dude. I think it really...
I agree.
So then I also thought to line up with that the next domino to fall was sports betting in the US. I played in the cannabis sector 2015 to 2020. I love a nascent industry. I love gray markets. I love things where people are a little afraid to touch them. It just means there's a ton of opportunity. Although I have mixed feelings about sports betting, I think that there's a huge opportunity to, we saw this soccer blog that was selling cleats, and I was like, oh, well, I mean, there's probably more money in affiliate sports betting stuff. Anyway, so we have that. Then I have a small SEO agency where we help people. I mean, I've been involved in the SEO space like 15 years. God, 15 years, sorry, a long time now, give or take, maybe more. we crushed that for a few clients. I love that just because it's I like people that work and we do well there. And then last summer, I bought a database SaaS, a DaaS, if you will, database as a service, database as a service.
Okay.
Called Offmarket. That's offmarket.so. We basically just pull database. We pull data on like Shopify apps and Shopify brands and content sites and all these different sources of businesses that are not listed in marketplaces for sale, and then aggregate. We're about to relaunch this next week, so maybe this is a good time to talk about it. Anyway, aggregate all the information on them, what industry they're in, how they're growing, et cetera, and then put together their contact information so people can reach out to the buyers and buy off to the owners and try and buy them in off market deals. Then I got a newsletter. That's it.
Do you own all of these, or are you investors in?
Those are all things I own. Well, the soccer site I don't own fully anymore. Everything else I own fully. I have someone who's working with me on the database SaaS. I think probably will, if things go right next week on the launch, I will probably ask them to come in and operate it with me because I think it can scale it to be something much bigger. The newsletter I run fully on my own. The advisory arm of that as well, fully on my own.
Are you comfortable sharing just that portfolio of businesses? Like what's kind of top line revenue?
So that, $1 million a year. Not, very sort of small. And this is where the wall gets, they're all nice margin businesses, but part of the problem becomes I had this thesis a couple years ago that was wrong. And I learned it the hard way. The thesis was like, you could buy 40 small businesses and grow them out. Right. And it just the OpEx doesn't work in that way. Right. It doesn't. Yeah. Because you have to be the operator of said businesses because the businesses cannot support hiring a fantastic operator on their own.
It's hard to buy and integrate 40 disparate businesses. If there are 40 businesses in the same vertical or the same industry, like, of course, there's economies of scale, but it's very difficult to have.
I bought in 2021 and bought a hearing aid brand that was doing, we grew that brand to about 3 million.
So random.
Dude, it's so random. We grew that brand about 3 million a year and sold that. But like when I put a board together because I wanted to, me and every ecom bro thought we could run an aggregator at the time. We're like, let's just roll up all these Shopify brands. Thrasio doing it with Amazon. Well, Thrasio just declared bankruptcy, and half the people that sold to Thrasio will never see a penny because they're all on earnouts.
Oh my gosh!
But the first brand I bought was Blue Angels Hearing, and it was doing like $50K a month or something. We grew it to like $250 a month, and my friend David, who was on my board, who was like ex-big private equity guy, CFO of a big consumer brand doing about $2 billion a year. He was like, well, now you have to buy Silvertech. And I was like, what? I don't want to just buy Silvertech brands. He's like, no, dude.
What the frick is Silvertech?
It's like technology for the elderly, right?
Oh my, really?
Well, once I bought the hearing aid brand, he was like, dude, you got to stay in Silvertech. It'll be, it's like you can stay.
I feel so cool. I just learned a new term. Like my background is healthcare. I should know what Silvertech is.
There you go. Maybe he made it up. Taught me. Stuck in my brain.
That's amazing. No, it makes total sense. Silvertech.
So he's like, you got to buy Silvertech, right? And like that, because he's like, it'll be much easier to exit this portfolio to a PE shop, much bigger later on if they're all sort of in the same niche industry. Point is, I didn't do any of that. And so what I've learned is that over the couple years, we sold that and I closed down that aggregator that I was trying to run, that holdco I was trying to run because it wasn't going to work. The next thing for me is either go build something very big again off the back of one of these things that I own, which I may be off market, which is all roads lead to owning an investment bank. But that's a whole different story. Or buying something much, much bigger, right? Because the reality is I'm, more like 2 to 3 million in EBITDA businesses, $20 million businesses, $15, $20 million businesses, because I want to be able to pay an operator $350,000 and a couple points on the business to really leave an amazing job and be great at running business.
Well, next month, it'll be a year since I started this podcast. I've had over 100 interviews. It's been a ton of fun, but I promised my wife at some point I would decide whether or not this was going to be a business or we would just continue to pay for it out of our pocket. And I'm exploring monetization, to be honest with you. There's not a ton of costs, but I do want to figure out a way to cover the editing and the packaging and the promotion costs of putting this podcast together. So I am looking for sponsors. I don't know what that looks like. If you've enjoyed this podcast and you've ever found some value and you want to sponsor, reach out to me, nick@cofounders.com, and let's get back into it. Dude, I have so many questions for you. Okay, so what's interesting to me is that all the businesses that you described, the blog, the SEO, I'm blanking on some of the others, like they're not sexy.
These are not all.
They're not tech companies. It's like, I developed this new app and marketplace and that takes hundreds of millions of dollars of investment. These are real businesses that happen to be tech based, I guess. I don't even know what the right word is.
But I'd say internet based is what I would say.
Internet. Okay.
But to that point, like, I think what's funny is when I first started talking about all this stuff, like, people used to say to me, like, how do I get into e-commerce? And I was like, that's so vague, man. Like, imagine take away the E and ask me how to get into commerce. I mean, it covers everything, right? These are all technically e-commerce. We're selling something through the internet, right? You know what I mean?
Yeah,
We're all e-commerce based.
So what I want to know is, like I said, you were doing SEO stuff in high school, apparently. Was that the first real business that you had that was like, all right, I'm generating cash flow. This is a thing?
Real's relative, right? As you get older, burn becomes much
Sure.
bigger. Your life, your lifestyle costs.
I guess how long did you do that business for?
So I started blogging when I was 15, and I mean, I remember I had a blog called goldpiecexl.com. I'm sure I should rebuy that domain.
Gold piece.
It was so random, dude. Like I was like into sneaker culture, and I thought I was gonna start stuffing down gold in my bedroom on the 12th story in Manhattan in my mom's little apartment.
I love this story.
And I was like trying to hustle like that,
Yeah.
And I was like writing these articles and just like spamming them into blogging communities in DMs every day. Like, you should read my article. And like one or two went viral and stumble upon and dig, and I made like $35. And I was like, what? On AdSense. And I was like, my mind was blown. I was like 15 or 16. And then it just sent me down a path of figuring out advertising and sort of programmatic display advertising and sort of then affiliate marketing. And then I became a decently sized publisher in the affiliate marketing world. So there's advertisers and publishers. Publishers place ads. Advertisers pay publishers to place ads. And I was a moderator on this forum called Black Hat World at the time. I was like 17, 18, which was like a very big SEO forum. And it was cool at the time. Everyone was anonymous. It was forums, right? This is 20 years ago. And I was a super admin on another forum called Moneymaker Discussion. We're just talking about internet marketing stuff. And I realized I was getting paid $45 a lead on an offer called FCR, freecreditreport.com. And most networks are paying at like 28, 25, something like that, in that range. So I just partnered up with one of the owners of one of these forums and was like, dude, let's just build an affiliate network and let's just broker these offers, because that's what ad networks do. They just broker between advertisers. And we built a company called Liquid Offers. And we started this little affiliate network, and we just started brokering. That was the first offer we brokered, because I was getting paid $20 more in every lead than we were paying out. And then we bought an old content locking website called Upload Forever. So for anyone who's younger, maybe younger.
How old were you?
I was 19. I mean, it was small. Okay. It was like $7 or $8 but it was just like, it was a file hosting website. Sorry. I remember back in the day, like, if you want to download a song, you had to like go to like a file.
Oh my gosh, yeah.
This like Napster era, LimeWire kind of stuff. And so we just bought this file hosting website and then just locked all the downloads with a CPA offer. So if you wanted to download like this song, you had to put in your email into win a free iPhone offer.
What's a CPA offer? Cost
per action. So like we would get paid every time someone took an action. So it'd be like, oh, so, Nick would say like, I'm hosting World of Warcraft, the game, right? If you want to download it for free, you can download it here, but you have to enter in your email to get it. And then the sweepstake people that would pay us $2 for every email entered, and we pay you out $1 for every email, and we take the vig of that, right?
Were you going to school at the time? Did you go to college?
I took a year off before college. I mean, dude, I think my tagline on Twitter is 2 exits, 1,000 failures. I mean, obviously it's an exaggeration. I'm being hyperbolic with 1,000, but like, yeah, I almost didn't graduate high school. I went to 5 high schools. God bless my mom for putting up with me. I mean, I was in the ultimate nightmare. And I told her if I had to be a super senior, I was never going to go back. And I graduated by the skin of my teeth. I had a clothing company with a friend that never went anywhere. You know what I mean? Like,
yeah.
Took a year off, then I went to college, took the money from the internet marketing stuff, started running around nightclubs, blew it all on nightclubs. Realized you get paid to be in a nightclub, became a nightclub promoter, dropped out of college, second semester, senior year. I have 8 credits left to this day.
Where were you going to school?
I went to Hunter in Manhattan, a small school in Manhattan. But I mean, I'd come from this like very educated, albeit not wealthy, very educated family. Like my mom went to Harvard, my dad went to Yale. I actually think that was the reason that pushed me a lot towards entrepreneurship, was I realized that like education was not the way to make lots of money. And I was always worried about money growing up. So anyway, I digress. But yeah, that was my first thing. We sold that little business, sold that little affiliate network to another network called Empire Media. And it was small. It was like $60,000. You split it 2 ways, pay taxes. But I thought I was like a god. You know what I mean? I thought it was the cool.
I think a lot of times we think that entrepreneurship or getting into entrepreneurship has to be this grand plan. All right, I have the skill set. This is what I'm going to do. I mean, that's how I like approach things. But there's many other instances where it's kind of just this series of events that make sense. Like one thing led to another, led to another, led to another. And then 5 years later, I'm in a nightclub getting paid to promote it. You know what I mean? Like
yeah. I mean,
it's
then,
not like
by the way, then when I left the nightclub world, which I've ran away from so fast at 26, and like, I remember on my resume, I got an opportunity to like help launch an SVOD, subscription video on demand channel for Lionsgate called Tribeca Shortlist. And I remember like putting on my resume. I mean, I don't have a resume now. It's been forever since I had a resume. But I remember putting my resume like, oh, marketing for Tal Group and Butter. You know what I mean? Like, and they're like, no,
yeah,
I was texting girls and selling bottles. I mean, it was a very different kind of promoting. You know what I mean? I mean, marketing than other stuff.
Well, so I'm in a similar boat. I barely graduated high school. And before I met my wife, I went to community college and just dicked around. I like took tennis classes. I had like 5 Fs on my transcripts, and
beautiful.
Somehow the only reason I went to UCLA to get my MBA was because both of my brothers are Oxford educated lawyers. And I just felt like the freaking black sheep of the family. So I'm like, I should probably get an MBA from somewhere.
I mean, I got 2 sisters, both with walls of degrees, and I do not have a bachelor's. I know because I'll tell the story now because it doesn't matter. When I sold DMO in 2020, I was like tired of the ride. I was, I had some money, but I was like tired of this. I mean, I think that like that sort of, I paid myself $2,000 a month for the first 2 years living in my ex-girlfriend's studio with her. I mean, it was a grind in the beginning.
Jeez.
In Manhattan. I mean, $2,000 a month in New York City is nothing. Taking my laundry to my mom's house so I could get it done. But I mean, cry me a river, whatever. I mean, I wasn't like, it's not like I couldn't eat, like I wasn't someone like that. So when I sold the company, my sister introduced me to some people. I was talking to these guys that are in a practice at McKinsey called Leap, which is like they build startups inside bigger companies. I think they may have built a Domino's app. I think they built Marcus for Goldman. Like they basically build these startups underneath the umbrella of these massive.
They're like an outsourced incubator within these companies.
It's a great way to put it. And Ari was the senior partner who ran in that practice. And he was like, dude, why don't you come work at this practice? And I was like, dude, I don't want to be an analyst at McKinsey. I was like, it wasn't the vibe for me because I watched people go through that. He's like, no, would you do an AP role, right? Associate partner role. I was like, I would do an AP role. Start the base is like 450. You know what I mean? Like all of a sudden, and I know people who are partners and senior partners. I thought maybe I could go that route.
Did you say you're like AP? I don't know if I have a penis or not. I just
I didn't. I didn't. I should have. But the way that connect this 4th round of interviews, everyone's like, dude, you don't have to run a case. All the senior partners love you. 4th round interviews, filling out a GDPR compliance thing. And it says, what is your highest level of education? And I said, high school, because that's it. And so then I emailed the recruiter and I said, hey, just want to flag this for you, consultant speak. I want to flag this for you. I didn't actually graduate college. My resume says I went to college for 4 years. It does not say I have a bachelor's. It says Hunter College, media major, these 4 years, which is true. I just ended up not graduating. She goes, I don't think it'll be a problem. I get an email a day later.
Famous last words.
And I'm really sorry. I don't think it's going to be a fit. Some of the senior partners don't want to take a risk on you. And of course, I was so sassy about it. I was like, well, obviously, if Mark Zuckerberg or Bill Gates came up in here and want to be an associate partner at McKinsey, you wouldn't really worry about how many degrees they had. Anyway, so it wasn't a fit. Thank God it wasn't. But now I've been ranting. I apologize.
No, that's awesome. I think what's really interesting about your background, your history is like, I don't know if this is a thesis that I've actually formulated, but it's something that hearing you talk makes me think. Like there are tech companies where you're developing a product, an app, something for people to use. And then there's a lot of tech companies, I guess tech is the word, e-commerce companies that are just really good at capturing and finding attention.
Sure.
Whether that's social media where you're like, oh, I have views and I have a distribution channel, or it's like, oh, I figured out how to do the customer acquisition. And like that is like the driving thesis for these businesses. Cause like what I'm hearing you say is, oh, we figured out this is our cost per lead and this, oh, we also figured out this really cool channel, et cetera. Has that been a constant theme for you? Is like, oh, I figured out the distribution almost first?
Yeah. I mean, I think from here on out, I kind of only want to sell into what I call latent demand, right? But I think that people get afraid of competition when competition just implies there's latent demand, right? Like if there's a bunch of competitors, it says to me there is demand that is sitting there looking to buy said product. To answer your question, yes. B, I sort of believe that there is not a single business on the planet that through following the right steps, a little bit of luck, but like get into a couple $1 million a year is not, I don't want to like downplay the difficulty of it, but it's also not impossible, right? Like there's no industry or niche that it's not possible to get to like $1 million or $2 million a year.
Yeah. There's a pretty replicable blueprint that you follow and you can get to that number.
Yeah. 10, 20, 50, 100. I can't promise that. one or two for sure. I mean, before we started recording, I told you, I've seen people doing handstand courses, doing $70,000 a month on how to do a handstand. I think it's people are sort of underestimating distribution, right? And underestimating just figuring out CAC versus LTV, right? Like your cost to acquire a customer versus the lifetime value of said customer.
I worked in healthcare. I did not know what CAC or LTV was until I got on Twitter. Like genuinely, this is going to sound weird to say. There's so much demand that you almost don't need to worry about your CAC or your LTV.
Sure. When I sold DMO, as part of that sale, I became an SVP of a telemedicine company for a little bit. It was very weird, but you start learning about like PBMs, and it's like this very,
it's crazy.
It's a crazy industry. Dude. In which money is like abundant. Do you know what I mean? Like in certain regards, like adjudications and market. It's just like, it's a wild space. And so, yeah.
What I think is crazy, I'm not a big venture investor. I don't have any venture investments, but one of the sayings that I've heard as I've been learning about it is like, first-time founders focus on product, second-time founders focus on distribution because they realize how hard it is to get that product to market. And I don't know if you probably know this, 50% of all VC money ends up being spent on Google or Facebook.
Yeah, it's crazy.
They're acquiring customers. That's it. Like it's CAC, it's customer acquisition costs. And that blows my freaking mind that we don't talk more about distribution, or that, oh, James is an influencer. Wow, why is he on this channel, et cetera, et cetera. It's like, yeah, and his brand is probably worth 10x what you think it's worth.
Dude, I mean, we bought Blue Angels Hearing through a DM on Twitter. You know what I mean? Like that's, that came from a consulting agreement with someone that wanted like help with convert, and then I looked at their business and I was like, dude, I want to roll up a bunch of businesses and eventually we'll take them public. That was the idea. Dude, I'll talk about all about it now. With Blue Angels Hearing, I mean, we were in talks with, I won't say which bank, but with the small investment bank that was like, we were trying to comp out Blue Angels to Eargo on the NYSE. Eargo on the NYSE trades at the time was trading at a 40x price to sales.
I'm sorry, what? Eargo on the whoosy?
Eargo is a hearing aid company on the New York Stock Exchange. Right?
Okay.
And so
you say NYSE?
NYSE, on the NYSE, New York Stock Exchange.
It's not the NYSE? Am I crazy?
I've never heard the NYSE. Is it the NYSE?
Oh, I've never heard the NYSE. This is great. I cannot wait to hear what people say. Because
I've been saying NYSE for like 10 years, but maybe it's NYSE. NYSE sounds great.
All right. Anyway, sorry.
But they wanted to comp. They were like willing to comp it out to another hearing aid company on the New York Stock Exchange, which are trading at a 40x price to sales, right? So they were like, okay, you guys are going to do $3 million this year. We're going to say to clients that you're a $100 million, $120 million company, and we're going to go sell $20 million of stock at a $80 million valuation, saying that it's below mark, And so I don't even know how I got to that story, but my point is like, I guess my point of that is that bankers will just make money in any market. But there's a reason I was bringing that up for a reason.
Distribution, how you found that deal?
Oh yeah, how I found that deal. I mean, I found that deal through a Twitter DM. You know what I mean? Like, distribution is king. I think that like anyone. Here's the other thing. I've also sold now a good amount of like advisory and courses. And here's the funny part about all this is, so you'll see. I told you I love nascent industries. Everyone like hates on course sellers. Oh, course, are we loser? We can't sell. Ask anyone who's built a real business how hard that is. That all of a sudden has a little bit of a distribution, and then say, oh, by the way, you could go make an extra $300,000 this year selling your sawdust on the side. You would be, what kind of ego do you have to say that's no? You like, as an entrepreneur, I look for competitive advantages, right? That's just, I look for opportunities that other people don't have. I happen to have that opportunity.
Dude, I 100% agree. You know how hard it is to run an 8-figure business or even build it to that scale? And like for me in healthcare, I didn't have $1 million per employee. Like I wasn't Google. And so it's like, oh, I'm doing $12 million this year and I've only got 12 employees. No, I had 250 employees. Yeah. Because I had CNAs and nurses and doctors and physical therapists and I had to manage all those people. It's freaking hard to manage that many people and have that stress. And so, yeah, if I'm sitting here looking and I'm like, I get why that guy's selling a course. I don't knock him. I don't look down on him.
100%. And I think one thing I've thought about, one reason I shied away from it is because apropos of me talking about where I want to go next in my life. And, I've had a lot of conversations about raising a small fund. I just sound so crappy, but 2 and 20 and $5 million sounds like a really poorly played hobby to me. I'm not really interested in that. And I don't think I've had enough wins for people to blank check me 50. right? Which is where it starts becoming interesting. Probably syndicate some stuff. We'll look at doing that. But I had been afraid of having the personal brand earlier on because of a lot of the world I know, where I felt that certain people were like, that's cheesy. Why would you ever do that? I don't want to invest. I don't want to invest in that guy. He's cheesy. Then I realized that it's about being polarizing. Great marketing is about being polarizing. Hate or love Trump. Trump does well because he's incredibly polarizing. I can break down funnels for you to show you where it's like survival kits, and it's like the intro says, the ad copy says fellow patriots. It says fellow patriots on purpose because it wants to push liberals as far away from that funnel as possible because it doesn't think they're going to buy, right? And so in terms of me raising capital or doing a bigger deal in the future, I was afraid. The problem is I'm trying to appease everybody, but screw it. Lean into content, lean into personal brand, because yes, you will lose someone who says, I don't want to write a check to that guy who's making videos on the internet. But you're also going to find someone that says, I want to write a check to that guy who's making videos on the internet because I think he understands the future and distribution. And he's trying to build business models in a way that couldn't be built 10, 20, 30, 50 years ago.
All right, now's the part of the show where I feel the most uncomfortable, but my therapist says I need to face my fears. So here we are. I've started a newsletter and I want you to subscribe. And what you're going to get every single week are the aggregated conversations from that week that I have on this podcast with an overview of what their business actually looks like. I'm also going to throw in a review of 1 or 2 businesses that are listed for sale. I'll give you my opinion on whether or not the EBITDA multiple is good, or there's customer concentration, or there's red flags or green flags. And then lastly, I'm going to give you one piece of actionable advice every single week on how to buy your first business. So click the link below, subscribe to my newsletter, and let's get back into the show. If you think about it, the stronger that people are repelled by somebody, there are people who are equally as attracted to that person. There's a balancing act to it, right? And so if you take a stake and you take a stand for something, you can attract a lot of hate, but you can also attract people who are very serious about that industry.
100%, 100%. And I think that's true about everything, right? I mean, we can talk about dating, right? Like if you try and, if you're like really into online gaming or you're really into fitness, like those are both things that might turn off someone that's not into either of them. But if you lean into that, maybe you end up with a partner that loves that thing, right? Like, and what a beautiful,
isn't that the point?
Partner,
and isn't that the point, to be doing
isn't
the thing?
Isn't that the point, to be able to be
enjoy?
you and be happy with being who you are? And so I feel that way about marketing and business as well.
So I'm curious about this because I'm in a similar situation where I've sold these companies. And the whole reason that I got into content was because I didn't know what I wanted to do next. I was a little bit burnt out. I had been myopic about focusing on those companies. Then I sold and it was like, well, what's CAC? I never heard of that before. Let me do some research. For me, there are tons of opportunities. I could go raise money. I could go run a fund. Running a fund doesn't sound super interesting to me because I know what it would take to get to the $100 million. I know how hard it would be to roll these businesses up. I'm not saying I'll never do it. I'm just like, right now in my life, there are some things that I want to be here for my kids when they have sports. How are you thinking about the next step? Like what are your parameters as you're looking at your next one?
I mean, to get super specific, I need a business that I need some sort of venture. I'm 36 that by like 50 adds $50 to $100 million in equity to me. I mean, these are like,
why?
Because I think that for me, probably 20 to 30 ends up being what I would consider true escape velocity in the US today. Accounting for inflation, that probably goes up a little bit over the next 15 years. And I would like to take home, this can sound, I almost don't want to say this because it sounds so jaded, but I don't need it today. But in the future, probably 2 million pre-tax a year. And that's because I live in Southern California, I live in LA. So it's $1 million in take home. And anyone who's listening to this that's going to write me a check will recognize what actually having 2 or 3 kids in private school in LA might look like. You know what I mean? Like, and living a decent life. And that's probably $1 million a year.
There's 2 things that you said that I have an immediate reaction to. The first thing is, I think it's hard to understand how much money $50 million is until you have it. I also think it's hard to imagine for most people how little money a couple $1 million is until you have it. And I know that sounds really weird to say, but it's like,
I think I tweeted something 2 weeks ago or 3 weeks ago that was like $1 million is both a lot of money and a very little bit of money at the exact same time. And it really is true.
Yeah.
And I was having a conversation with a brand I advise that was like talking about if they could get an exit versus, and I was like, because it's run by these 2 people, they're awesome. They're going to do mid 7 figures this year, but take home like 100 on it each. You know what I mean? Like after that's e-com. Everyone thinks e-com is this cash flowing machine. DTC is very hard and much smaller margins than people think.
Yeah, definitely not
Especially
anymore.
keep money in the business because you have to order inventory, right? So maybe they make 150 each on it, right? They do 2.5 million, they make 150 each on it, And I was like, what if you could each get $1 million out of that? What if you could each get I was giving the example of 100,000 each. I was like, what if you could each get what if you get a $10 million exit out of this business in 5 years, as opposed to trying to go for $100 million exit? They're like, I wouldn't take it. I was like, you do recognize they each made more like 50 this year, right? $10 million exit is 200 years of the labor that you put in, right? I want you to think of it that way. It is 200 years of your time. It's such an astronomical amount of money.
I think about this all the time because have you ever seen the articles where it's like, if I would have invested $10,000 in Amazon in 1997, it would be worth $400 million today. I'd have $400 million. Or like, oh man, I had shares in NVIDIA 10 years ago, but I sold them and they'd be worth $100 million today. And I always say this to people, like, you wouldn't have $100 million today. No, but I would. I had share, or if I had bought it, I would have. I'm like, no, you wouldn't have, because you would have sold the first time that it doubled or it tripled. Or what happens when it 10x? What happens when you put $10,000 in and all of a sudden you're sitting and you're looking at your brokerage account and it's 100,000, or it gets to 100,000 and then it draws down to 50 and then it gets back to the 100,000, which all happened with Amazon. And you're like, I should probably take some risk off the table. To have the conviction to hold for that long of a period of time is insane. I think that like less than 1% of people have that personality trait where they can just let it ride.
100%. In fact, this is where I think that illiquidity becomes your friend. I think this is why real estate makes people rich in general in the US, is because it's illiquid. Like that is why it is the best store of value for the average Joe, is because you cannot just grab a chunk of your wall and go buy a sandwich with it when you want to, right?
That's really interesting.
And it's just because you're locked up. It's just because you're locked up into a contract where you don't really own your house for 30 years. And that's why I think that it works out for most people.
For me, I had done the calculation 10 years ago. With inflation, I need like $5 million when I retire. And that was like the calculation that I did. And so when I sold my businesses, it was like, cool. I mean, I'm like, retirement's done, taken care of. Everything at this point is gravy.
Sure.
And what's weird is I have felt that way. I've still felt that way. But recently I've been like, I think I need to take another swing.
The chase of money, as we were talking about that before, is kind of worthless, right? I mean, it's just, you either enjoy the chase or you don't. I can tell you a lot of my existential lostness has been because I'm not chasing anything. Don't get me into a longer conversation about like my purpose and what I think humans need to feel, my ikigai, right? And humans need to feel happy. And especially often, I think men, and it's not even some misogynistic thing. I think very primordial, like caveman-esque, like I need to chase something. Like I think that is very normal for me. I need to gather. I need 100%. To chase,
Dude, I have 4 boys. 10 and under. I'm not kidding you. Before I had kids, I honestly believed it's not really that big of a difference between boys and girls. It's kind of all socialized, isn't it?
Sure.
Dude, my boys are like dogs. They need to run their energy out. I wrestle with them every single night. They literally will pull their pants down and pee in the back. Like they're just different. And so I agree with you. Like men have different needs, but they also are worse at having community and drive and socialization. And so anyways, I think you need to have something that fills you up, that motivates you. And that's not just money driven. It's totally. Like, do I have a purpose in this?
I love money. I don't want to change, I love money, and I'm good at returning people money when they've invested in me before. The last time I brought everyone like 7x on their money in 3 years, right? Which was great. But my point is, like, when you ask me those numbers, it's partially because I like winning so much. And money is just the scoreboard of capitalism. And we can say that it's not fulfilling, and it's not. I'm not rich, but I've made enough money to recognize that money is not what makes me, like super, I guess rich is relative, but you get my point, right? Like, and so I also know that the company that we sold, I owned like 27% of, and what you hear, you see someone, I was saying this to someone the other day, they're like, oh, well, Jessica Alba owns The Honest Company. I was like, how much of The Honest Company do you think Jessica Alba owned at IPO? They're like, oh, 50% wrong, 40% wrong, 30% wrong, 6%, right? Which, by the way, I'm surprised because I think it's like below, well, she probably was a director, but like there's weird percentages in which with public companies, which you have to file if you sell. I think 599 is one of those numbers. Anyway, my point is that like building $100 million company, it sounds great to own all of it. I don't think that's a likely scenario, right?
You rarely do.
You rarely, rarely do. So when I talk about building a $100 million company in the next 15 years, which I see is totally possible, I think about owning 30% of it. Do you know what I mean? Like, something, and by the way, that when you then exit, if you get cash, 50% goes to the government, you know what I mean? Like, and then you get 15 million, right? And so that's why those numbers exist. And for me, I've realized my love of the chase so much. I need something to be big enough for it to be exciting for me to really keep chasing. And that's partially because I have enough of a cushion that, like, if something gets boring to me, if the chase isn't exciting enough, I'm just like, whatever. It's not so important.
It's interesting what you said. You would raise money. You're not looking at like, oh, I'll buy a business and then bootstrap it to that number. You would go out and take down a larger deal.
Yeah, I would be open to it. I think that the way I look at raising money is not venture style. Like, I don't want to raise money from anyone who's looking at 100x on their money. You know what I mean? Like, I think that I had a conversation very recently with a credit fund, that private credit fund, that asked me basically if I wanted to do like a fund of funds, like run a small fund from them, which I would be open to doing, just because I think, albeit a little boring, no better, more beautiful business model than arbitraging money. You know what I mean? I think taking money from investors and lending it out for more money, than you are returning to investors, is just a beautiful business to run, right? In terms of like simplicity. But yeah, I think I would. I think that, but I'm much more, I'm a deal junkie. I get very excited by the structures of deals, So like, I would happily take money. I told you before we hopped into this call that, like, I once took 6 figures in personal debt, and with a 30% equity kicker on my business to fund a business. Like, yeah, like, I'm super down to like take money, give someone preferred shares that has a certain payback period that then they turn into common stock afterward. That, like, I'm interested in taking money from people that 5x's for them over 3 years and they still own underlying equity. You know what I mean? I would raise money in a much more creative deal structure, I think, than just like.
What would be the profile of that business? Like, what would it look like? What kind of offerings would it have? Revenue structures?
I'm going to eat my words. I'm sure tomorrow someone will call me and say, we should do this, and I'll think it's the best idea. If I were making bets over the next decade to like hedge risk, but also think that makes money, I would probably stay in managed services in the B2B world. I mean, I think that like.
Tell me what that is.
So agencies work, marketing agencies work, IT management works. I think you want things that get enabled by AI. I think, as opposed to disabled by AI, things that have like a human layer on top of tech. I think that they become a little annoying to run, but if you can go up market, I think that most of like the Twitter world doesn't really recognize what upmarket offerings look like in B2B. I mean, like $20 million engagements. I mean, that's not the world I think I would play in, but the step down, the businesses that I have, offmarket.so, which is a database of businesses that should be for sale. The addition we're adding to it is deal flow as a service, essentially for PE shops and family offices, right? So
is that why you said everything goes back to being an investment bank?
Everything goes back to being an investment bank. So like, we will do the outreach and find you businesses, package them up and bring them to you for X amount retainer a month plus a piece of the transaction at closing. So then all of a sudden I had a conversation with another friend who just sold his business for $150 million, $200 million, and was like, oh, well, these bankers take $2 million, blah, blah, and it's all just can be done with AI. And we're like, oh, well, if you layer that on top as a service, but then it starts to be like, why don't I just buy a broker dealer, which is an investment bank? Why don't I just ask an investment bank and actually do these services myself? So it all leads back to having a investment bank.
I didn't know this until, I don't know, maybe 4 or 5 years ago. I used to think investment banks were like this really cool, like they're literally making investments, like almost like a hedge fund, right? Like I thought investment banks were hedge funds. And then I found out they're just a high-end brokerage. Like they're just.
And some are not even licensed to sell securities, by the way. There's different kinds of licensing for, yeah. I mean, and you ever hear anyone talk about a BD, a broker dealer? That's an investment bank. And so some are just licensed for M&A to be able to take fees on M&A transactions. Some are licensed to sell securities. Some are licensed to manage money for the people, right? But like, there's all these different kinds of licenses. You could go buy an investment bank today for $300,000. You know what I mean? Someone has to have a Series 63, I think. Don't hold me to the fire with this, to run it.
Agreed. And someone's going to write me and be like, actually, an investment bank is a very convoluted, whatever. Yeah. But I'm like, no, you're just helping companies that are of a certain scale, probably $20 million plus. 20 million is like the very low end.
Yeah.
50 million is probably actually where it starts. Go to market and sell. Like that's your job.
And by the way, there are now basically white label broker dealers that will absolutely act as your back end for you and I to go transact upon, right? To go use them for transacting.
Really?
In a totally compliant way. In the same way that, like, here's an old Mercury, I think, debit card, right? Mercury.
They're not a bank.
Mercury is a UI on top of Bancorp. I mean, as almost every single, to be like an actual like lending institution, like FINRA registered, and someone's going to dial in and say whatever, I'm an idiot for everything I'm saying. But I'm just saying that, like, there are most of the millennial banks you see. Marcus is not a bank. Marcus sits on top of Goldman Sachs, right? You mean like these are just UIs on top of old.
Well, it's the same. It's the same thing with a lot of this AI technology currently. Like, they're just wrappers.
Sure.
They're not the LLM. They're a wrapper on top
but
of.
I do think I saw someone tweeting about this, and Chris and I talked about it the other day too. Everything's a wrapper, and I do think that everything's a wrapper. Like, I saw someone say, venture is just a wrapper on capital. It is just a wrapper on capital, right? Like, every website is a wrapper on HTML or JavaScript, right? Like, everything really is a wrapper on something else. So I'm not people that like super bearish on wrappers. I'm not super bearish on wrappers.
Oh yeah, I'm not bearish on wrappers at all.
Mercury's just a wrapper on Bancorp. You know what I mean? Like, in fact, one of my many failed businesses, I had a company called. Basically, we were taking your credit card. And we were.
Should I know that name? I feel like I should know. I feel like that's a name.
We had some PR behind us, but I'll make it a brief story because I can clearly rant. We had basically clients would come in, we'd copy your credit card, magnetic strip, which is dangerously simple to copy a magnetic strip, by the way. You can buy for $30 or something on Amazon that will, if you swipe it, will take all the data off magnetic strip and then write it onto a new card. And this is why everyone wants to move to chips, because chips are a little bit more secure.
Oh, got it. Yeah. Okay.
Because magnetic strips are not secure at all. People get card skimmers, waiters will hold a card skimmer in their jacket pocket, swipe your card, and anyway, it doesn't matter. So we were basically copying your credit card, putting it onto a new metal credit card, and then attaching all these private services on top of it, like access to nightclubs and dinners and restaurants. And
yes, I remember this. Was this out in New York City?
Yeah, it was in New York City. Yeah, 100%.
Dude, yes, I totally remember this.
That's so funny. That was my company.
This is your company. Oh my gosh, it's so nice to meet you.
Well, we had like 500 users. It wasn't huge. But we were competing with, there was 2 competitors in the space. One of them just kept undercutting us with everything all the time. And we just couldn't. They were like giving tickets to like Taylor Swift for like $50. And we're like, how is this possible? And I just left Nightlife. I was still one foot in nightclub. So I still could like make a phone call and get a table for 50% off. You know what I mean? Get someone in a door. Every day I'm like calling everyone like this. And we found out that the owner of the competitor later on, after we had to close up shop, was Billy McFarland, who started Fire Festival, which went out of business because from fraud. And we found out through articles that he just was not ever giving people the tickets that he was saying were $50 for a Taylor Swift ticket.
Okay, this is where I heard of you from then. I like on the Billy McFarland documentary, and then like doing more research on him, I saw you as one of his competitors. That's what that was. That's so funny, dude.
So at least I know we were competing against a fraudster, but my point is to connect it, is that we were just a wrapper, right? Like we were not, we were actually not, the idea was to track spending and then be able to go to an institution later on and be like, we've got 10,000 members that spend here. You can underwrite them for, they'll move to wherever we want them to move to. That was the plan. It didn't end up working. We had to go to business. But my point is like, that was just a wrapper. We were just a metal card from China, that we got engraved in the US, and we would just copy, that everything's a wrapper is my point. So
this has been amazing. I want to know 2025. What am I supposed to expect from James Camp this year?
Ooh,
it feels like there's some good stuff cooking.
Everything we're running, all this little portfolio till end of Q. This is just super candid. End of Q1. It's in right here. And my huge fan of Spark planners. Used to be called something else, but it's my Spark planner. And apropos of like equities markets, there's a type of order type called a fill or kill. It's not really retailers would do it, but someone could execute a fill or kill order. So I like either it gets filled or you kill it. So basically what I've decided is that I've spent too much of my time spread apart on these little things that none are scaling, and they're all cute and they're all fun, but like that fill or kill end of Q1, either off market leans into this. And by the way, I will say, don't want to talk about it here, but there's a proposal I sent out yesterday to a financial institution that I think I may become involved with, but fill or kill. All these little projects get filled or kill end of Q1. Either some become takeoff and they do well, or they get killed. And I don't mean to go to zero. I will find a buyer for all of them, whether it's $5,000 or $500,000, and then find something to go 100% all in on again. But you'll see more content from me because I want to get back into the content game, as you and I were talking about. I had too much consumption last year, not enough production. And a little bit more existential. What is next? I'm 30. Someone said this to me the other day, bro, because I think of myself as a baby at 36, despite how gray I am. And they were like, dude, you're just having a midlife crisis. And I was like, oh, is that what this is? They're like, yeah, dude, you're just like having a midlife crisis. So we'll figure
Better
out.
to have it now than when you're 45, man.
That's true. Hopefully it gets solved now.